The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. Just almost had a technical faux pas. I kept popping up in Larry's room because I wanted to hear what he was saying. Always a fabulous Friday. Every other Friday, he does this live show. We're looking at the Dow. Let me just get this all organized here. Thank goodness. I think I've got everything right. Let me double check here. Is that good? Let me go Tiger Charts. Yep, let me go to host chat, and we'll go to the show. Okay, I think we've got it. All right, good. So the Dow right now, look, the VIX index hit 23.03. That was very high. It was above the high of the airline cuts. Government funding spiked to the upside on the 7th of November, and now it's made a new high. But I think that this is fantastic what I'm looking at right now, because it tells you within the context of the volatility index, and we were looking at this, and I drew this cup formation like a bowl formation. It's not really sharp enough to be a cup. It's more flat like a bowl, that we were starting to see higher highs in the volatility index, and that indicated to me that we would see, let me just check. Are you getting the charts in the den? Charts coming through. Let me just check. Yes, okay. So this bowl formation was telling me that the anticipation that we had that November, going into November, would be very choppy. But because of the strength of the weekly charts and this 9-period exponential moving average, it would take tremendous bad news to really tank everything. Three things that I wanted to talk about. Number one is in the Dow, we had that spike. It was just a very secular. It was within the Dow itself, nothing else. The Dow spiked to a new high at 48,431 3 sessions ago. That was on the 12th of November. And we were waiting. I was waiting to see whether or not we were going to get a peak D above the Chapman Wave inside track propellant zone and then go under it. Now what we've done is we pull back so sharply we're at the Chapman Wave inside track propellant zone, or it's going to becomes now resistance level, and this becomes the bounce off point. But it looks to me over a period of time we're going to take out the trend line that's a red line, the inside track that's like a little mini channel, and 46,790, that if we go underneath that, and today's low has already been 46,863, so we're really close. Then we're looking at a possible next week peak D in the weekly charts. Well, there's a lot to talk about based on the Chapman Wave methodology, but let me just say three things. Number one is we waited for that peak D. So it's peak D in the daily and probably a leg D going to a peak D next week. The monthly chart has gone to a leg A, and it holds all the way through December. That means if we have to go all the way through December with a lower high to make a peak A, not the S&P. So the number one was that peak D. Number two is, I've been discussing this, and for my subscribers, I have, instead of having live webinars for general public to come in and sign up and come in, I just do this for my subscribers. I just haven't had time to put the whole thing together for the web, but each hour, an hour and a half on a Friday afternoon after the market closes, my overview goes through all the stocks that we're looking at. It goes to what we're looking at, why we're looking at it. And I've been talking about this for some time, saying I believe that we've made an internal high. It's Technical Friday, so I need to talk about everything that I mentioned. So I look at the market. I use the Dow as a kind of a backdrop, and I've done this for years and years and years. Those who know me have done this, know that I talk about internal high, where it's like the earthquake, and then the aftershock is either less, the same, or more. But I treat it as I didn't mention what this was. This is what I call in a Chapman parlance the dark news cloud cover. I've had to try to change it a couple of times because people try to get it mixed up with a candle dark cloud. It's got nothing. This has to do with news, and it says Chapman dark news cloud cover. Why is it important? Because it used to be mostly bond yields, and then it became other things. And what happens is you get some kind of a shock to the system. It makes a high, but then it pulls back, and then it tries to retest that high, and either fails or just goes above it, and then fails. And then there could be, like here in January of 2025, we made this double top, internal high, residual high. Whoosh, we came down to from the, what was that, 44,000 area, down to 36,611. Well, it happened again, internal high, residual high, internal high, many times. And then I said, something's changed. In August, the August low, all of a sudden, we've got confirmation that there are minor pullbacks after the residual high. And what happened is we held the 9-period, the green 9-period exponential. I'm going to make this into like a webinar. It's like a teaching lesson for me because I also learn whenever I do this, as well as for you. So look what happened. That 9-period moving average was fantastic. It pulled back, and we're still long from the April low. We've had taken off little bits. We've had trading positions, short positions, long positions, but mostly we have that core position. Now look at this. We went pink, green, pink right here in middle of October, and then we ran up and went green. And even now with this huge pullback, even now the Dow's down 516, the S&P is down 47. Some of these rallies have been very strong today, and some of those instruments that were just horrible yesterday, like a Robin Hood, around the that's the GPUs. It has AI. It has all sorts of things like that. Very sharp. Symbiotic. These are stocks that we've bought from much lower down. We try to keep a little bit of a core, and we've taken lots of real nice gains. They got hammered. Robinhood, woof. Okay, so now what we've got is this latest one. It took a little longer and then a little longer. Now we've had an inside high of 48,040 that was made on the 29th of October, and then another high on the 12th of November. Now, within this context, we're getting a very sharp pullback. But as of now, we don't have, let me just check this to see if it's telling me I'm doing something. No, okay. It's telling us that this up channel is going to be so important to hold. I don't think it's going to hold in November. I think it's going to be broken. But at the same time, when you've seen such damage, I mean, 20%, some of those stocks that absolutely. Let me just show you right now. This is not a Dow stock, but look at this, Robinhood. It hit 153, and it's trading right now at 120. That is some takedown, right? Nice bounce from the low. I'll be back in a moment. Down to 114. That's a huge move. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I don't want to keep interrupting this, but I am going to show you. Here's the E-mini. It went to peak G, and the 1 minute chart pulls back. It's made a higher high. This technically should be a brand new A. I don't know, because we've had that big sell-off in the opening and then a big rally, but the Dow is still stuck. Not that great. We'll see what happens. But look, leg C in the 5 minute chart and only a leg A. Was this a 2-click session? I actually tried for a 2-click session. I got in at 673, but I just, with the show coming up, then I wanted to listen to that. I got out a little early, but I think this has a chance of being a very interesting day. So, okay, let's go back to our story. So the story is within the context of the Dow. So there were 3 things. One is that we had to get this peak D. Number 2 is I wanted to show you the Chapman Dark News cloud cover. And the third thing is the volatility index having gone up so strongly. And that tells me that we're looking, and I've been saying that for a while now, that I'm anticipating a very choppy November with limited upside action to higher highs, limited, probably no high highs. The Dow did make a high, the others haven't. In fact, October was the high for a couple of them. But most importantly, I think the lower lows is just slightly lower lows. But individual stocks, I mean, let's just take this for a moment. Look at J&J. This is J&J. Look at that. That's a beautiful move. Johnson & Johnson holding beautifully. The IYH. This is the health guy. I've been mentioning this for a little while. Holding beautifully. Look at that. Look at General Motors. General Motors. This is cyclical. This stock is down today 64 cents after making a new high yesterday. I mean, this should be down, instead of at 71, it should be down at 62 if this was the end of the world. I don't think so. Yes, you've got Caterpillar because it's in a very specific sector. Look at that. Has pulled back, this is the kind of pattern I'm looking at for the overall market going to maybe end of November, maybe December. I don't know. I'm going to be basing it. I have time sequences, but right now I'm more worried about how the 9-period moving average holds above the 14, which in Caterpillar's case is holding beautifully. I should say, I'm monitoring. Let's put it that way. Look at the Dow. Look at this, the 9-period moving average. Both of them are turning down, the 9 and the 14, but it's still holding beautifully above. It means that if it's going to go pink, negative, the Dow is going to go to 46,200 or lower. So I'm just saying, I'm going through this as carefully as I can. All right, now let's run the numbers. So we've got the Dow INDU is still down 417 at 47,036. The S&P is making this dreaded H pattern. This is Technical Friday, so I do need to always show you the pattern that I'm talking about. In the Chapman methodology, we have 3 core patterns: straight up, straight down, that's 1. Cup formation or V-shaped formation, that's 2. Arch formation or inverted V, like a pyramid, that's 3. Or a mix of 1 and 2 or 1 and 3. This is 1 and 3. It comes down, fails at a peak A or a B, and then it takes out the left side low. And if it takes it out deeply, it can go 1-to-1 to the downside. What happens at that left side low is imperative to monitor. What is that? That means that the S&P in the 65, I don't want to just move the the S&P at 6631.44, a close below that says, now look for the next left side troughs. In that case, you're all the way down to 65.57. So I'm going one step at a time, and I'm saying right now the S&P, the day is young, but the S&P has just gone negative, the 9-period moving average, but it's a daily chart. By the end of the day, this could be disappearing. You're back to green. So I'm watching this very closely because that would suggest you're going from a sell signal to a sell mode. All right. But the weekly charts are fantastic. Look at this. Look at the QQQ. Had a horrible session yesterday, but it didn't take out the low of the 7th of 598.67, but today it did. What is that? That's the dreaded H. Look. It took out the left side low after a peak B. So it's a B minus. And with a double top of peak C1, C2 at 637.01, that says you've got to be very careful because if it comes back down again, my rule of thumb with the dreaded H is that you have 2 bars, doesn't matter whether it's a 1-minute chart or a monthly chart, 2 bars. Sometimes I say 3, but I try to make it 2 bars to close above the left side low. And if you do that, it says you can bounce to the next icon on the left, that is resistance. In this case, it is the moving average of 615. If it goes above that, it would be this peak, but you probably won't make a new high above this peak. Or if you close above it. If you don't close above it, you can get to it. But to close above it, you have to really see all the technicals turn, and they aren't turning right now. So this is the leg C, and I'm anticipating the QQQs will be testing over November the low of the 10th of October of 589.05. The IWM. So now we'll look at this. IWM, beautiful candle today, except it is still down 91 cents. But that's taking out all the left side lows. The next low would be down at the 2nd of September, 231.47. Now, yields are kind of rallying, and that's really not good for the Russell 2000 small caps. So I'm looking at this and I'm saying, okay, I drew the rectangle in, I drew the arch formation in the rectangle. I said, be careful. If it takes out the left side low, you've got 3 bars in which to close above it. Well, it closed above the left side low of 237.55 very nicely on that low of the a month later, the 7th of November, but now you've taken that out decisively. Is it going to make a 1-to-1 to the downside? I think the IWM has the potential to do that. Let's go to the SMHs because that's really important, and I can kick myself. Well, I don't know about kicking myself, but I'm really upset because for weeks I've been talking about shorting NVIDIA, shorting the SMHs with the SOXS, but it's so difficult because they have quick bounces, and those bounces can take you out if you have a stop, and you have to have a stop. At least I do. But look at this. Dreaded H, peak A, twice now, 3 times. There's your little A, comes down. There's an A, comes down. There's an A, and it comes down. So this just says to me, low lows and lower highs. The SMH is the semiconductors better hold 332.40, the low of the 22nd, and I suspect this is what's going to happen. Over November, it's going to test the low of 324.83. All right? So that, and look at the weekly chart, still fantastic. Okay, even with two big red candles. Now, I had a couple of questions. I'll get to them in a moment. Let me just do this quickly. The TLT, that is the bonds, down 18 at 89.21, trying to get back to test the 200-period moving average of 89.09. But my suspicion is that if it takes out the low of the 5th of November, 88.88, takes it out, yields, you can see by this you're going to get a leg D. And you're already almost at a leg D in the TBT, having bounced off the 31.69 low and the 200-period moving average weekly chart. So 1 penny above 33.95 goes to 33.96. You start your leg D. So that just says to me, you've got to be careful. Look at the HGX. The HGX is the Home Builders Philadelphia home sector, a lower low. A multi-month low right now in a V-shaped pattern, inverted V-shaped pattern. I believe the music's coming on. What am I missing? Bitcoin is down. Whoa, look at that. I've been warning about this for some time. Peak D in the monthly chart going from 127,000 down to 95. I've been warning about the 97,500 level. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Guys, I just want to show you the importance of certain indicators that I do all the time. Look at this. Here's the 200-period moving average. You didn't even have to care about it all evening, all the way late yesterday. And all of a sudden today, what does it do? It tags, bam, 67.41, and it hit, it just hit 67. What was the high on the E-mini? Right here. Oh, come on. There we are. 67.39.50. It just almost tagged it, right? So I love these different indicators. And look at the way the 9-period moving average. That's why I say this has a... can't complain. I got into the 73, 66, 73, got out later. But I only because I had the show coming up and then I had this discombobulation with the wrong screen, so I got out. But look, it went all the way from that level right to this. 39. That's 59 points there, and the 9-period moving average is still looking strong. All right, so let's just do this. So let me just sum up what I'm looking at here. Being very cautious. We've raised a lot of cash, one of our biggest cash positions in quite a while, one of our fewest positions in actual long positions, but we still have our core positions like 16 in Robinhood, a little bit left, and different positions that we have, Microsoft. Why? Because those are core positions from way down. Robinhood, as I say, has, look at this. I had a quick question here. Could I look at Robinhood? So here's Robinhood. Robinhood is gone. There was 153.86 all-time high on the 6th of October, but it also made 153 round number open, and it was a peak D with a double top. So you come back down, it goes all the way to 120.88, screams up to 152, I think it was, 151, and then it comes down in the H pattern, takes out, and then holds that level. 120.88 was the left side low on the around about the 22nd of October, runs up and then comes back down, and on the November the 7th it goes to 120.70, and then it bounces all the way to 138, and it comes down to today's low of 114, round number low. Whoa, I love the round numbers, so I'm going to say that is important. If we take out 114 in the next week, that's going to be very negative for Robinhood. But right now, that's a level that is very important, and it's up $1 at 122.50. Look at the weekly chart. I drew in the rectangle, I drew in the arch formation, and it's come down. So the questions come in, where would you start putting money to work? Well, down 114, down 40 points. That is almost 30%. That is a huge move to the downside. So risk reward, I still see testing of the 114 and probably making lower lows. When I listened to the news yesterday, and I listened to different financial news, and I listened just to little spurts here and there, wow, I was about to jump out the window. And then I heard Kramer talking about matching 2000, and I got you out. He didn't get us out, I've been listening to him since 1985. I have most respect for him. I know I used to have squabbles with late Dave White, who didn't like him at all. But I say he's done an incredible job. Without him, you wouldn't have had Robinhood doing what it's doing without his show. And he's got people into major stocks and said, these are holds. They're not trades. They're buy and hold. I respect him, and his knowledge is just amazing. And he's not just the stock market. I mean, he talks about opera. He talks about different things. I have respect for him. He's made mistakes, but I know that in 2000, he was still long and saying these are the greatest stocks right up until about March or April, where things did start to come apart. So, yes, people have. So I said last night, wow. I mean, they are telling everybody just to get out, be careful. And that's just, we might make a low either Friday or Monday for a bounce. I think they're going to be, the VIX index is telling me they're going to be a lot of bounces. So at 122, It's already 7 points, 8 points off the low of the day. As a trade, you want to do it, maybe you can do it as a trade. I would have patience. If you're a long-term buy and hold, you could just start a nibble right here, knowing that you've got a risk of going down to, you could even, if things really get bad, because remember, the economy got really badly hit in this shutdown. There are a lot of out of work people, and if the Fed says, well, we've got to stick with this, we're not going to really lower rates, that's going to be an issue. So 95. I'd say between 102 and 95 is probably the buy, the big buy for the next big move up in Robinhood. But as a trade, yeah, if you want, I would have said it earlier on. I should have said it earlier on when it was down in the 119 area. But this is already getting a little bit tight. But keep it in mind. And if you're a long-term, you know what I would do? If you play options, I shouldn't say play, if you use options, buy 120 option for January. And I think you will do very well. You know, I mean, you can look at it that way. Okay, next question was, where was it? IREN, I-R-E-N. It's the one I was talking about before. This is, it's been really good to us. We went in the 22s. It screams up to double top 74.15 in October the 15th, comes back down, and then goes to 76.87. And this is IREN Limited, ordinary shares. It was Iris Energy Limited, next generation data centers, renewable energy, GPUs, and now everybody's blasting these guys. But these are the guys that are making money. There was something in the announcement that they made for the earnings and the conference call that was just a little negative, something about just looking out. There was just a little hesitancy about some things. But hey, this is a great company. I like it. But it's not acting all that well since the 76.87 high goes down to a low of 44.55. 22 points, another one of those, maybe almost a 30% down. I would say this is another one. If you're interested in it, you maybe use an option, but you could just nibble right here. But you've got to realize that this low right here of the 2nd of October of 44.95, we've already been there. I'm sorry, it was this one here, of the 26th of September of 39.70. That looks to me like that's kind of where it would really find a home as a base. But it's done very well. Next question came in. Could I look at, so buying here, is this a time to be buying? Let's see. I would say that if you're risk averse in that this is an area you want to be in, and you want to be in one of the very few that really does very well, this is probably it. But if you're getting in at 48.05, be prepared that you could have a 10 or 12% pullback, and then you want to add to it. So just with that in mind, keep that in mind, okay? But I would rather have a little bit of patience. But in the meantime, that's what I'm looking at. Next question came in. Could I look at you, one of our favorites?
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So a very nice comeback in many of these areas. So we're looking at UUUU. This is Energy Fuels Inc. Uranium went to 27.33 with a 23 round number low. On the 1st of October, and that was it. And then it came tumbling down. Look, traded H, peak A, down. Peak A, fail. Peak A, fail. And now peak A holding. So right here at $16.20, up 72 cents. While I still think there's going to be a little more kind of consolidation, I'm going to say, what was the question here? Basil, what is the situation with you? Think it is a buyer? Thanks. So because you're a longer term buy and holder, I'm going to say just get a small position of 6. If you have it already, then that's good. But I'm just going to say if you aren't in it, at 16.90, because it's held the low of 6 days ago, it hit 14.08. Today's low is 14.27. I'm going to suggest that you just nibble here. On the nibble, I wouldn't have a stop. I'd have it some flexibility, but definitely if it takes going in 16.14, 2 points off the low. I mean, that's huge, right? So you don't want to risk too much, but if it's just a nibble to get a sense of, because if this goes to 17.50 next week, this could have been the low. This past week and a half could have seen a pretty decent low for a bounce. I still think it's a bounce because the damage is really serious right now. It made that V-shaped pattern to the downside. So I'm just going to say nibble here, but if it takes out today's low of 14.27, it could double bottom and all that. But then, to me, on the nibble, I'd be prepared to have a fairly good percentage potential loss, because it's to tell you whether to put a lot more money into it. So yeah. So in fact, I'm going to say this: I don't think it should pull back from here. It should actually keep going. So 15.45 would be my nibble stop, even though it's just a feeler. Right. Next question came in. Netflix, NFLX, Netflix, NFLX. Yeah, so this is a little different. Netflix, online movies, etc., 1,120.45, down 33. It made a round number. It hit 121. 1267.10 was the most recent high, 1267.10, and it had a 1260 round number open. And the next day it had a 1267 high, double top, and it's just down. Look, it's gone from the 1260s down to a low of 1,073. I wouldn't touch this right now. So the question came in: is Netflix a buy? Where is the buy point? The buy point is, how does it test over the next week and a half? Certainly, if it breaks above the high that was made 3 days ago of 1,145.69, goes to 1150. I'm wrong completely. Then it's trying to fill that gap, huge gap. I don't like gaps like that just don't even try to get filled for a long time. So I'm just going to say I'd hold off. 1106 is the 200-period exponential moving average that it keeps using as a springboard to try to bounce off and then fails. So I want to see, how does it hold 1,100? And then how does it hold the low that was made on the 5th of 1,073? Is today the low, is this a buy signal? I think on the very short term, we've got positions in that we want to get under certain conditions that are on the short side, but only on a huge, this continues all the way into the close maybe. And then we have to risk another move up on Monday. But I think that this is a bounce, because the semiconductors, there's a lot going on. If NVIDIA is struggling to go to new highs, I think that's just telling us that area is starting to suffer a little bit. Now, so Netflix, I'd hold off. Okay, that was the question. And where is the buy point? I'd have to see how it holds between 1,100 and 65. All right. Next question, ONDS, ONS. This is a stock that's in its own orbit. It made a high of 11.7. This is Ondas Holdings, private wireless data and autonomous drone solutions for industrial and government. I've followed this for ages. It's in my list, I believe, in my list of watch lists for subscribers. But we haven't actually got in there. It makes these V-shaped patterns up and down. Oh, look how sharp this is. It goes from 11.8, 11.70 on the 8th of October to the low a week and a half ago of 4.94. That is a huge decline. And look at the move today. And I love this. I looked at it last night and I thought, oh, the 9-period moving average is rallying. The MACD is about to cross positive. The stochastic's good. It was on my list as a potential to look at, because the whole area of drone, I think this is a huge thing in the overall market around the world. And look at this. Today it's up 18%. It's up $1.21 to 7.76. Wow. Now what do you do, huh? Well, I think that this is telling you that it is a player in the field. So if there is a major sell-off later on in November, going maybe into early December or something like that, keep your eye on this for the next big move up when everything starts to come back again. Ondas, I think, is a player. It's in a leg C in the monthly. It should go to a D, so it should go into the 12s at some point. I like it. Wow, would I actually start a position here at 772 when just, the low today is 610? You know, do I want to take between a 12 and a 20% risk right now? I don't know, but as a trade, I think this market is showing some bounce strength. That VIX index should pull back. Let's see where the VIX is right now. VIX index is trading. Yes, it's at the low of the day. So I think we've got a little bit of a legs here. We might be rallying, and that's what I'm saying. I think this is choppy. I don't think this is the end of the world move to the downside. It is choppy. If it's in the wrong area, whew, you saw Robinhood, those stocks, 20, 30%, whoosh, just like that. But I think we're looking at something that says the rotation going from the stocks in the healthcare to General Motors, it's just very diverse. But in certain areas that got extremely overbought, and I mentioned them, you've got to expect some kind of a pullback. And that's really the way we're looking. Look at General Electric. General Electric is holding in the middle of I drew the rectangle in. What was the low today? 296.25. What is the high that we're looking at? The double top in the 316.53, then 316.67, and yet it's held. I think it will break this over a period of another 2-3 weeks, and the next level would be 291.40, 291. Did I move my? Yes, I did. 291.49, and then 289.66 is the low of the 29th of September. So as I'm looking at it right now, you've got digestive phase. This is a beautiful multi-week digestive phase for General Electric. So yeah, we're looking at yes. What's the story? Okay, next question came in. I'll be back in a moment. Basil Chapman, Tiger Initiatives out. Dow's down only 267.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Let me just see. Did I correct that? Oh, I've already said that? Yeah, I guess so. Okay, so a couple of things going on just before we wrap up. We go to Steve Rhodes. I had a question about RIG, which is Transocean Limited. It's trading up 6 cents at 406. I think it's kind of stuck now for a little while. It's done very well considering crude oil. It's been going up very nicely. This is in the ocean rigs, Transocean itself. So I think it's kind of stuck between 445, maybe 450 on the upside, and 350 on the downside. We're starting off with 365 and then 355. So I just think it's stuck, but the 200 period moving average is like a magnet. If it can get to the 445 area, then the 451 it'll be like, it'll just go right there and it'll be grabbed. Next question was about QBTS, yeah. This is the dreaded H pattern. I drew it in. I showed it exactly. Look at that arch formation. And now it's done almost a one-to-one to the down. Not quite a one-to-one, but 18.54 is the 200-period moving average. I believe that this D-wave quantum computing, I think over a period of, it's making lower lows and lower highs. I think it will hit the 18.54 200-period moving average at some point, and I would say some point fairly soon, but it has a lot of resistance in the 27s. Then a question came in about, where was it? Here we go. TGB, which is to Seiko Mines, came out with bad earnings. It's doing quite nicely. It did a double top in the 480 area, and now it's pulling back. And I've got the big rectangle, and it says it must hold 363, 360 as support. If it takes that, that's a problem. But I think it's going to just move sideways for a little while. That's in copper. So as I wrap it up, we might have made, I don't know if we made the high of the day, but this is a really good retracement, good bounce in many of those oversold stocks. And I don't know if it carries on to Monday. It depends on how we close. But I do believe that I'm going to continue to say November is going to be choppy with very limited upside, but the downside could start to open up a little bit. I don't see a big smash to the downside yet.